All right, guys, welcome. Today we've got AmeriWest Critical Metals. They're currently doing a private placement round, so we'll be talking about that, I'm sure, as part of this. But David Watkinson is CEO. Please go ahead. Give us what you got.
Well, thanks for having me. So AmeriWest Critical Metals, we trade on the Toronto Venture Exchange, and we trade OTC under the symbol ALWIF. Some forward-looking statements that you can read and a QP statement. So AmeriWest is a diversified exploration company. We have projects in Oregon, Nevada, Arizona, and British Columbia. We were previously known as AmeriWest Lithium, and we're focused on the lithium projects in Nevada and Arizona. But with the crash of the lithium markets, we diversified into other critical metals. So we still have some lithium properties, but we just acquired what we think is an exciting copper project in Oregon. So we acquired a property called the Bornite Project. What's kind of unique about that is I worked on the project back in the early 1990s. The project has essentially been idle from exploration since then. So we are planning to try to fast track that through exploration and permitting. The initial goal would be to try to develop a small mining operation, about 1,000 tons per day, underground high-grade copper, gold, silver mine. There is potential for a larger deposit there. So we're in the process of raising actually $3 million. We started at $2 million and we just increased yesterday in the size of the financing. We're doing the $3 million. So we have 24.3 million shares issued and outstanding prior to the financing starting, 1.6 million options at 20 cents that expire in 2030. Warrants currently about 3.8 million at 12 cents expiring in 2027. So diluted, we have 29.7 million shares out. So we did a 6-to-1 rollback back in late 2023, I believe it was. So we have a pretty tight share structure because of that. We have a pretty diversified shareholder base, because we did the rollback and we had done quite a bit of marketing in the US. We have a fairly large base of US shareholders and a smaller base of Canadian shareholders right now, but a lot of those are small shareholders because of the rollback. We have about 10 million shares controlled by management, friends, and family right now. So the properties we have, the Bornite Copper Project, which is located in Oregon, Rare Earth Project that's up in northern British Columbia, a lithium clay property that's located in Thompson Valley, Arizona, and the Railroad Valley property that's located, it's a lithium brine property that's located in. My name is David Watkinson. I'm a professional engineer. I'm a mining engineer by background. I've got about 40 years of international experience. Most of it has been in mine permitting, development, and operations, a big history in project management, working for engineering companies, contracting companies, and operating companies. So I work for companies like Placer Dome, Kinross, Vulcan Materials, Pipes and Mining Construction Canada, and a number of other companies, both private and public. So I worked on this project for a company called Priceless Resources that was based out of Salt Lake City back in the early 1990s. And I co-authored a pre-feasibility study on the project back in 1992. Plexus was one of the companies that amalgamated in 1993 to form Kinross Gold Corporation. So the project overview, we're located about 50 miles east of Salem, Oregon. The property is in the Willamette National Forest, so it's on U.S. Forest Service ground. The deposit is a brecciatite, so it's roughly cylindrical in nature. It stands vertically, so a cigar shape. It's about up to 600 feet in diameter and was drilled historically to a depth of about 1,000 feet. So it's open at depth. Copper mineralizations are primarily pyrite and bornite. Higher grade mineralization occurs on the outside margins of the pipe, and lower grade mineralization is on the interior of the pipe. So the potential here, there's expansion at depth. There's potential for other pipes to be found. Typically, these pipes occur in clusters, and there could be a porphyry system at depth below the deposit. So this is a cross-section and plan view of what the deposit is. It was modeled at back in the 1990s. So you can see there's an interior pipe here that's lower grade material. And then you have a higher grade shell that occurs around it. And then there's an area of sheeted veins that's on the periphery to the deposit. This is a cross section here that's taken along this line to give you an idea. It actually outcrops a little bit on surface and if you have the right cross section here, but very close to surface here, roughly at 2,200 foot elevation. So when Plexus was developing it, the focus was on this high grade rind on the outside of the project, and they developed a mineral resource based on mining it. But at today's copper prices and gold and silver prices, there's potential we might be able to mine the interior pipe and have a much bigger project. So the property was discovered by Amical Minerals in 1975 through soil and rock chip sampling. It does have a geophysical signature, so historically induced polarization was done, and that could be used to look for other pipes in the area. It was spun out into Cypress Minerals from Amical back in the mid-1980s and acquired by Plexus Resources in 1989. And Plexus acquired or did additional drilling in 1989 and 1991. So Cypress and Amical completed about 23,000 feet of drilling between 1975 and 1998, and Plexus completed about 18,560 feet of drilling between 1989 and 1991. So about almost 42,000 feet of total drilling was done. So these are some significant intercepts that you can see. So there's some very high grade copper intercepts that occur in that perimeter of the pipe, and potentially in the interior, you still have some fairly decent intercepts, but there's also byproduct metals that would contribute significantly to the economics with both gold and silver. We didn't do any assaying for any other critical metals or byproduct metals beyond the gold and silver, so that would be an opportunity to look at when we get in and do additional drilling. So Plexus was advancing and fast-tracking the project back in the 1990s. So they conducted metallurgical test work, acid-base accounting test work, did environmental studies, mine planning, and other technical work, and that culminated in an internal pre-feasibility study that was done in 1992. We submitted a plan of operations to the U.S. Forest Service in 1991 and completed an EIR for the project and successfully got a record of this in 1993. So there was a wilderness preserve that was created adjacent to the property, but the property was carved out of it in 1996 by Congress. So legislation actually allows roads, power lines, pipelines through the preserve that we need to support the project. So this is the pre-feasibility that was done in 92. Myself and Bart Stone was a geologist that worked on it. So I've been able to contact Bart. He is still around. The guy that did the resource modeling I've talked to, the guy that did the permitting back in the 1990s is still around. This is a copy of the cover of the final environmental impact report statement. The plan was to build a 1,400 ton per day underground mine operating 5 days a week and 1,000 ton per day gravity flotation mill operating 7 days a week with an 8-year mine life. So we were getting 95% recoveries for copper, 90% for gold, 95% for silver. We're able to produce a 36% copper concentrate grade with the metallurgical work we were doing. So the mine was designed with ramp access, level long hole mining, high density backfill with potential for paste backfill. Paste backfill was just being developed at that particular time. The focus again was on the high grade shell with material greater than 1.5% copper equivalent. So Plexus did both a resource and a mining reserve. So this is done prior to the implementation of NI 43-101 or CIM standards. So they had a combined measured indicated and inferred resource of about 3.2 million tons, 2.2% copper, 0.017 ounce per ton gold, and 0.54 ounce per ton silver. And this would have been at the time, at metal prices used at the time, over a 3% equivalent copper grade. So they also proven and probable mineral reserve of about 2.2 million tons. They were focused at taking out the material that was greater than 1.5% copper cutoff grade. So back then we were using $1 per pound copper prices, gold price of $3.50, silver price of $4 an ounce. So at that time we had a 21% after-tax internal rate of return. So obviously, if we were to redo this model today, the economics would change, fairly significantly with today's metal prices. And, there might be potential to mine at a lower cutoff grade than what was used in the historic work. So this was a model of what was planned. So you can see the outline of the ore body here, ramp access with sublevels and sublevel long hole mining, taking out the outside perimeter of the ore body. And, we would have taken anything that was lower grade, that was above a 0.5% copper in the development work would have run to the mill at the same time. So Plexus amalgamated with two companies to form Kinross in 1993. So Kinross then became, a major gold mining company focused on gold and became less focused on copper properties that were in Plexus at the time. So they were unable to change a National Pollution Discharge Elimination System permit, an NPDES permit, due to what's called the Three Basins Rule in Oregon. So this was a rule that was passed in the 1970s to preserve water quality in three drainage basins in Oregon, the North Santiam being one of them where the project was located. They granted something like 50 other permits between 1976 and 1990 when the Bornite project came up for review, and somebody dragged this rule out and essentially was able to stop the project at that time. So Kinross tried to get a legislative rule change and failed, and then they tried a takings lawsuit and failed. So in 2002, their lease was running out, and they became focused on gold as opposed to copper, and they dropped the property. So we believe we can get around the Three Basins Rule either with land application of water or just putting a discharge pipeline to the adjacent drainage basin, which is only a few miles away, and we shouldn't be stopped, I don't think, by the Three Basin Rule. So the property was restaked by Idaho General Mines in 2004. They saw the potential to overcome the Three Basin Rule, which is why they acquired it. They became General Moly and were focused on two properties in Nevada, but they ended up going into bankruptcy in 2020, merging now as a private company called Moly with the Mount Hope project and Casalt Mine, or projects in BC. So they didn't do any exploration on Bornite. They essentially acquired the property and held it. Over the years, I tried to acquire it a couple of different times in other companies I was involved with, and we were never able to get a deal together that made sense. And finally, we reached a point in AmeriWest that they were willing to let the property go, and we were able to acquire it for a significant discounted price. So to acquire the property, we paid $100,000 US, and we granted them a $15,000 per year advanced minimum royalty that will convert to a 2% production royalty, of which 1% can be acquired at any time for $1 million. So low acquisition costs with significant upside potential. So our fast track steps here, we plan to go back and we have a lot of the historic data that we were able to get from New Moly, who had gotten it from Kinross. So we have all the paper data that were for the drill collars and assays, down the hole surveys and things that we can use to recreate the 3D geological model for the project. So we have to digitize it and do it. We have acquired all the historic core from the property, which they had. We're going to relog and reassay the historic drill core, verify the location of the drill hole collars in the field. So from that, we'll redesign the drill program that we're planning to do with the funds we're raising. So we're looking at maybe drilling about 10% of the historic drill holes. We're about 54 holes, I believe, used to create the historic resource. So we're looking, probably drilling sort of 5 to 10 holes in this initial program. So we'll do initially a geological technical report with recommendations and a budget for the drill program, and then permit and conduct the drilling. And then we'll also complete the geophysics work, looking for potential other deposits in the vicinity of where this pipe is. But we'll look at trying to do an estimated new resource technical report, probably 6 to 9 months from completing the financing, subject to permitting. This is where the historic drill core is stored. It's actually in Tonopah, Nevada. So the high-grade deposit has significant gold and silver credits, about 2,200 foot elevation with existing roads to the site, power nearby, U.S. Forest Service land. The area was actually burnt by a major fire that went through in 2020 called the Beachy Fire. So That's going to affect, the potential of permitting for the project. We hope in a positive way. So there was no old growth forest on the project site itself, but in the Opal Lake Wilderness Preserve that's adjacent to it, so that all burnt, unfortunately. So, that will affect potential environmental baseline work that has to be done on the project. So we have a lot of historical data and technical work, metallurgical test work, environmental test work, that type of thing, historic core. The exploration is low risk, fast track permitting potential. There's obviously risk with permitting anywhere on the west coast of I would say, both the U.S. and Canada. It's more difficult to permit in some other locations. So, we're aware of the permitting issues with the project and believe they can be overcome. Um, so the opportunities for expansion, mining the low-grade interior of the pipe, expanding at depth, finding other breccia pipes in the vicinity, and also looking for breccia pipes in the regional area. Amoco, certainly had developed other targets in Washington and Oregon, so there are potential for other breccia pipes and similar deposits in those areas. And then we're looking also for a porphyry feeder system at depth. So it's a critical metal. We think that we'll get support from the government. We may qualify for fast track permitting under Fast 41. And eventually, as we develop the project, potentially getting funding from the U.S. government may help us advance the project and capitalize it. So I just took over. I'm also involved with a company called Roundtable. Their president just left and joined the Department for Energy Dominance and Financing. So we have a good contact, I guess, that we hope may be able to help us, guide us in how we may be able to raise funding for the project that it's come out of the mining industry that we know well. So potential ways are that we might be able to monetize the project over time, certainly attracting a senior partner into a joint venture. I've done transactions with both Kennecott Exploration and Ivanhoe Electric in recent years, so we may be able to attract a senior partner to the property. We might be able to sell it to an operating company or develop the property ourselves, which, it's a small project that would, if we mine the high grade shell and focus on the high grade opportunity, it's a small project that a junior could finance and develop. And we could sell the whole company at some point to the right investor or operating company. So it just depends on the valuation and the timing. We also have a rare earth property we acquired in northern BC recently. So it's near East Lake, a fly-in, fly-out opportunity. So it's a yttrium rare earth property. So it's a share acquisition. We paid 1 million of the 2 million shares already, 55,000 in cash, and work commitments of about 125,000 over 18 months. And then a 2% NSR that can be acquired for $250,000. So it's a known belt of intrusive rocks that have been sampled with surface sampling for both rare earths, and there is potential for diamonds that have been found on the property too. But there's 3 decades of historic exploration that's been done, but it's been limited to mapping, surface sampling, and geophysics. So there's multiple targets identified for follow-up, but no drilling has been done on. And then Thompson Valley is a property that we acquired when we were focused on lithium. So it's 2 mineral exploration permits in Arizona and some unpatented claims. So property size is about 1,400 acres. The USGS had discovered lithium clays in the areas in the 1950s and 1960s. So there's an adjacent property that's owned by Vanderbilt that mines a hectorite clay, and USGS had been sampling there and had gotten results up to 4,500 parts per million in clays in what's called the Lyles pit that Vanderbilt owns. So we acquired the property adjacent to it, and we've done surface sampling and mapping, and we did a technical report in 2023. So our surface samples went up to about 1,295 parts per million lithium. We have a geological field plan of operations in place that allows a drilling program, but we've essentially put the project on hold while the lithium prices are low. We have another property called Railroad Valley, which is a lithium brine property. So it's in Railroad Valley, Nevada. So it's a large property, about 11,200 acres that we either staked or acquired some claims from American Battery Technology Company. We completed geophysics, so gravity and magnetotelluric geophysics, and we did acquired seismic and other data from the oil and gas industry. So there were a number of historic oil wells on the property and adjacent to us. So we were able to get a lot of data from that acquisition and to find a large brine target. So we've signed a letter of intent to auction the property to Pure Energy Minerals, which is a TSXV listed company. So they're one of the largest landholders in Clayton Valley. They're partnered with SLB, which is formerly known as Schlumberger, which is a global technology company with a market cap of about 70 billion. So SLB constructed a lithium extraction DLE plant in Clayton Valley associated with Pure Energy's property. So we're hoping that bringing Pure Energy along will also bring Schlumberger, which would help us advance the brine project, and they have the technology potentially to bring it in production if it gets that far. So Pure Energy can earn an 85% interest in the property by splitting about 2.175 million in cash and share payments and doing 3.5 million in project expenditures. So this 3.5 million should allow probably 2 to 3 discovery holes to be drilled into the brine target. And so we'll know for sure what's there, and we'll be able to continue on in partnership with them and keep an interest in the property if a major discovery is made. So our management team, myself, 40 years of experience in the industry. I'm also involved with Rise Gold Corporation and Emergent Metals Corporation. Robert Hill is our CFO. He's got over 25 years of experience and is a former vice president of finance and business development of Haywood Securities. Sam Eskandari, who's also on the call, is one of our directors. So he's got extensive experience in founding a number of public companies. Currently the president and CEO of Nova Pacific Minerals. James Haley is a geologist that worked in the oil and gas industry primarily, but has also been working in the mining industry probably for the last decade. So he's been involved with a number of junior resource companies and brings a lot of experience, when we were looking at developing our lithium brine properties and drilling them. But, he's able to manage drill programs and other things needed. And Bryson Goodwin is a new director that just came on board. So he's been involved in finance and investor relations and marketing and a variety of different juniors, and the managing director of the Synergy Capital Market Advisor. So our current financing was initially $2 million, and we just raised it to $3 million. So the share price is 0.2. We're doing the financing at is 25 cents with a warrant at 40 cents. I think we're trading at 38 cents right now in Canada, and US, I believe, around 28 cents. So, it's a pretty good opportunity, the financing. So if we close on the 3 million, we'll be putting out another 12 million shares after final close. And the use of proceeds will be for drilling and exploration focused on the Bornite project, working capital, and we're looking at, including a significant amount into marketing the company that we're rebuilding it. So, from an investment opportunity, you're getting an experienced management team with extensive permitting and project development experience. I had extensive knowledge of the project, worked as a senior project engineer on the permitting and engineering back in the 1990s. It's a high quality project, but little exploration risk because of all the work that's been done in the past. And, describe the permitting risk as moderate. You'll get exposure to our other critical metal projects. And, we have an attractive share structure and valuation with multiple exit strategies. So I'll be happy to answer any questions.
Okay, great. Mickey, you were first. Go ahead.
Good to be first.
Quick on the draw.
Well, David, thank you for a succinct and concise presentation. I would encourage you, though, to put this on your website. I had some difficulty doing my due diligence. And I understand you're kind of rolling this company out again. So I'm a bit confused, though. I show that you have a CSE listing, and I think you said you have a venture exchange listing. Can you clarify that?
Yeah, it's a CSE listing. I might have made a mistake when I did.
Okay, fair enough.
It should be
Um,
CSE. Yeah.
well, yeah. So it's a nice little deposit, but I guess I would, being a geologist, and I presume you have a geologist on staff or will be hiring somebody quite soon. Um, the key here is it's small with the current reserves, about 140 million pounds of copper or copper equivalent. I'm not sure. But my experience, I've spent a lot of time in the copper business, is that is too small to justify the capex of building a mill. And I think that is one of the issues here. The 1992 pre-feasibility study, $6 million for 1,000 ton per day mill. I would submit that you can multiply that by 10 now, based on my experience in the copper business. The other thing that I'm unclear about, I went on SETI and looked at insider holdings, and on SETI, it shows you own 535,000 shares, and you told us that you got 10 million in management, friends, and family. Can you clarify that a bit?
Sure, I'll try to go through some of the things you brought up. So we are in the
Yep.
process of bringing up a new website. So if you go to www.AmeriWestCriticalMetals.com, that website is coming up now because we're changing the name and changing the mural of AmeriWest Lithium. So that's one of the reasons the old website is out of date. The new website is just coming up. As far as friends and family, like I have shares that I have acquired, but there is a group, primarily out of Vancouver that, has been supporting the project or the company going back to 2021 when the company formed, that holds, a number of those shares. So they're in a friends and family group. Management owns a smaller amount, primarily because of the rollback, right? So like some of my shares were rolled back 6-1 when we did the rollback back in 2023. So my percentage is smaller, at this point in time. What were the other questions you had?
Oh, well,
Oh, the
it was more of a
capital cost.
statement. I think you're,
Talk about
yeah,
the capital cost.
I don't think it's big enough to build a mill
I think
at
it's
this
big enough to build
stage.
it. I mean, we'll have to drill it out, right? I mean, we may have to drill more reserves off in order to do that. So, the deposit they had was an ore reserve of about 2.2 million tons focused on the high grade shell. Today, we may be able to focus on the interior pipe at today's metal prices. So all of a sudden, instead of 2.2 million tons, you might have 60 or 70 million tons that's interior to the deposit. So we don't know the answer to that yet. It's what I'm saying. We're going to have to do the drilling and we're going to have to do the technical work to do that. So there's ways, if we focus on the high grade shell, we may have to find another pipe. We may have to expand the depth. The drilling was only done to 1,000 feet. We may have to expand the depth to 3,000 feet, for example, which would triple the size of the resource. So those are things that will come out of the technical work that we do on the project. So, right now we're basing it on what Plexus did in the 1990s, but that's 30-year-old work, right? So we're going to have to recreate all of that.
Okay. Good. Shows you what inflation really is. If the cost of this went up 10 times since 1992.
Probably
Isn't it?
has.
Yeah. Okay. Thank you, Mickey. Brent, go ahead.
Yeah, well, as usual, Mickey caught some of the things I was going to ask. I guess what troubles me is you're like just up the hill from Salem,
Yeah.
just over the hill from Sisters. You're adjacent to the Opal Creek Wilderness, which is closed to access, and the Willamette National Forest. Realistically, what's the timeline do you expect to get drill permits and then advance past that?
Drill permits, like we'll start out with a small permit where we probably disturb less than 1 acre because we don't need to have a big area disturbance for a drilling program initially, right? So the first drill program won't require a lot of baseline work or anything else to get a permit. There's legislation in place on U.S. Forest Service ground that allows disturbance on less than 1 acre ground. Now, once we start to exceed that, if we have to do more drilling and disturb, 5 acres or more, then we'll have to go through an EA process, which can take sometimes 18 months to 24 months to complete, where you have to do baseline studies and go through a more rigorous process. We're hoping that the fast track 41 process will help speed that up, but those are the same processes that you're having to face in Nevada or other jurisdictions. The timeframes are the same. We are near Salem, but the project had good support back in the 1990s. The area then got a lot of support because they shut down the forestry industry, and so there were a lot of people looking for work back then. We may not have that same support that we had in the 1990s. It's a different world, 30 years later. But the Beachy fire has gone through there, so there's a lot of wild cards there that come into play. There were groups that were trying to protect, like the Opal Lake Wilderness Preserve. A guy named George Atia was the main person that developed that Opal Lake Wilderness Preserve. His family had a mining background, and he was not anti-mining. He was there to preserve the old growth forest. And the ironic part is he was killed in the Beachy fire. It was a sad situation, but a lot of these forests haven't been managed well as far as wildfire control. And that whole area, unfortunately, burnt in a major fire in the town of Detroit, which is nearby, burnt parts of Mill City. So that's going to affect our permitting. There's no doubt about it, but I don't think it's going to prevent anything from moving forward. The U.S. Forest Service there was good to work with in the past. I've had conversations with them through Zoom calls, related to the project. So I think, that EIR was done in about a 2-year period back in the 1990s. It might take a little longer today, but typically it might be 3 years to complete an EIR process today. So, we'll have to go through the regulatory process. It's not going to happen in 12 months.
All right, thanks. I'm just curious, though, if your pipe, as I recall, is 600 meters in diameter.
600 feet.
600 feet. Okay, still 1 acre is enough to drill that off?
Yeah, because it's you're essentially setting up drilling fan holes from 1 or 2 locations. So potentially at right angles, you'd be able to set up and drill a series of fan holes down vertically. So, or not vertically, but on an angle, right? You're trying to intercept the pipe at an angle. So you only need a couple of setups. There's no roads for the most part that have to be built because the road goes right essentially beside the project. So you're not having to use a lot of area up on permitting the roads, which, you typically would have to do in Nevada. They include the road as part of the area of disturbance. So, for the initial drill program, we don't need to disturb much ground.
All right, thank you.
Okay. Doug, please go ahead.
Yeah, David, very nice presentation. What first drew my attention to this company was, well, 2 things. Number one, the market cap is $6-8 million, which is just about nothing in today's market. But you had this one spectacular drill hole of, 100 feet of 6% copper plus,
Yeah.
at current prices, pretty reasonable gold and silver values, about $50 per ton of gold, $50 per ton of silver. So it's pretty spectacular, the market cap against that. And I'm wondering, the drill holes that have been done so far, were they all intended to go down the outside shell? How many drill holes, what indication do you have that the main body of the cigar is worth going after? Because that's not differentiated in this chart.
Yeah, I mean, all the drill holes obviously didn't intersect the ore body when they were doing the initial exploration. So, we'll have to put a 3D model together from the historic data. We didn't acquire a 3D model. It'll all have to be sort of taken from paper data and redone, but that should be able to be done, fairly quickly within a couple of months of doing the acquisition. So, I look at that, the drill hole here, CC34, which is 308 feet, so 1.05% copper. So we know the interior pipe might have a grade probably in the maybe 0.5% copper range. So that the question is, we'll have to model that and see whether at today's copper, gold, and silver prices, whether that's economic to pull as part of the ore body, then all of a sudden, you have a much bigger ore body than sort of the 2 million ounce or 2 million ton resource that they had historically. It might be 40 or 50 million tons, right, at a lower grade, but it might make a different project.
Well,
So,
it's nice that you're raising $3 million now. I have no doubt that you can do it. But how much more money are you going to need to prove this up? $3 million
well, if we
ain't
can,
going to cut it.
depends what happens when we reassay an historic drill core. Right? So we have that. If we're able to reassay that and do this confirmation drilling program, we may have enough data to come out with a new resource. Again, probably focused on the high grade material initially. But we may have to do more drilling if we start to look at drilling down further in depth or trying to drill out the interior pipe more. Most of the holes went through, from one side of the deposit to the other when they did the drill, right? So they would have gone through the high grade on one side, the low grade in the middle, and the high grade on the other side of the pipe. So a lot of the drilling did that. We're at a point prior to project that's been sitting there for 30 years, right? So we have to do the technical work and put the answers together. I expect we may have to do more drilling, but we'll have to cross that bridge when we come to it. But we should have a good idea what's there, 3 to 4 months from now once we get the 3D model done.
So this was dropped, let's say, twice in the past. And as Mickey pointed out, why was it dropped? Is it because at that time the metals prices weren't quite good enough? They probably are now. But what scares you about this project? What's the biggest thing that can go wrong? Is it the permitting? Is it the lack of size? I mean, what worries you?
I mean, 1990, that wasn't necessarily thought of as a small project, right? Today it's thought of as a small project. So, what companies develop today and what they were developing in the 1990s might have a different view of what's there. But, Plexus as a junior was focused on trying to get into production and get cash flow. They wanted to become an operating company, and this was the key project they had. They also had two other copper properties, one called Silver Star in Washington and one called Western World that was in California. So they also had a 25% interest in the Denton Rawhide mine at that time. So they were one of the companies that merged to form Kinross. Kinross very quickly became focused solely on gold and wasn't particularly interested in the copper property. Eventually dropped them. There was a period of time they actually had a subsidiary they set up called Kinross Copper Company. But, as they grew very quickly, they did a number of acquisitions and constructed different mines. Their focus wasn't on copper anymore. So that there's a number of factors. The lease was running out on this property, and the three basin rule that became something that they weren't interested in dealing with. They tried to do a legislative rule change and failed, and they tried to do a takings lawsuit, which they also failed. So, they walked away from the project essentially in 1990 or 2002, I guess, when they dropped it. So, and it's essentially sat there since, right? New Moly and their predecessors acquired it, but never did any work on it. They were focused on Moly projects that they had, and this was just in their portfolio, but they never did anything with it. So, been sitting there ever since. So we picked it up because we see the value in the project. We see it as a small potential high grade mine, but there could be something much bigger there. But we have to get in and do the work and determine what that is.
Okay, well, I'm very interested in this as a speculation. Perhaps I've just been spoiled by the fact that one of our early roundtable companies was Midnight Sun in Zambia, which had a private placement at 22 cents. It's currently trading about $1.60 or something like that. Similarly structured with the full warrant and so forth. So love the low market cap, and all things considered, I think it's a good story. But
yeah, we actually have very good lithium properties, but it's just that until the lithium price recovers, we're not going to see value for those properties. But either one of those properties has potential to become something much bigger. And then with the rare earth property, I think we offer a diversified number of properties. If we we have the ability maybe to do work on one of the other properties if we're doing permitting on the borite. So we have news flow coming out on a regular fashion. So, I think we have a good portfolio that we put together.
Okay, Lawrence, why don't we go to you next?
David, the Bornite project looks very attractive. I like that high grade part of it. I like the concept of getting into production near term. As Mickey pointed out, there may not be enough in the high grade alone, but with the high grade backed up by what you have in the interior of the pipe, it could be a very attractive mining operation. Can you give us more insight into your business plan around the near-term production potential, expanding to incorporate the lower grade material? So some indication of timeline and including, that whatever you see as the potential timeline for permitting.
Yeah. I mean, the first step will be to recreate, the 3D model and do an internal resource estimate, see what we have there. That'll lead to the initial drilling program, which, we'll be looking at trying to convert the historic information and make it NI 43-101 compliant. That'll be sort of the first stage drilling program. And we're hoping from that we'll be able to generate an NI 43-101 resource. So maybe, on a similar scale to what Flex has had. And then, we'll have to look beyond that at potentially doing additional drilling. If we want to drill at depth, if we want to drill and test for a porphyry system at depth, if we want to do exploration for additional pipes in the area, typically occur in clusters. If we could find, one or two additional pipes, that also would increase the tonnage potential and life of the mine. So, the first step, we're looking at using this sort of $3 million program. A portion of that will go into the initial work. We may have to raise an additional round if we want to drill and create a much bigger resource based on what we find in the initial work. So it'll be kind of a phase one, probably phase two project, but I can't tell you yet what phase two will be until we complete phase one.
Do you have a sense of timeline though? Like for instance, even on the 3D modeling, like
I think, we'll try to get a 3D model done within a couple of months. So we're looking at engaging Apex Geoscience and Edmonton to do the 3D model. And then, as soon as we have that, we'll find a drill program and permit it. So, I'm hoping that the permitting will only take a couple of months because it's such a small program initially. So, I'm hoping within, say, 9 months that we might, we'd have both a technical report, a geological one done probably within 3 months, and then hopefully we can do a resource report, say, within 9 months.
Okay. Lawrence, does that answer your question?
And any indication on the permitting timeline? You mentioned the FAST program.
Yeah, I've talked to like a lawyer on the initial program. So he sent the information on legislation, which is where this 1 acre disturbance comes from for the initial program, which would keep the permitting requirement. If we do a bigger program, and where you have to do an environmental assessment and a plan of operations for the drill program, that can take, environmental baseline studies might take you 18 months to do. So the permitting is typically taking 2 years to do for a bigger drill program. So that's what we're seeing in Nevada. I think we could achieve the same thing here with the U.S. Forest Service. The U.S. Forest Service is thought to be more difficult to do permitting with than the BLM, but it all depends on what jurisdiction you're in and who you're working with in a particular jurisdiction.
Right. And then the development permitting beyond that couple of year kind of timeline.
Yeah, if you start to get into, doing an EIS again, you're looking at probably a 2 to 3 year time frame. So in Nevada, it's typically from taking a project all the way through from, an advanced stage project through to complete an EIR and get all the permits in place. Similar to what we're doing, sort of phases of permitting. It's typically taking about 7 years to develop a project. So it's not a short period of time by any stretch of imagination.
Got it. Okay. Thank you.
Okay. Thanks, Lawrence. Ed.
Hi, David. How are you doing?
Doing fine.
So, on the interior pipe, I was just looking at the last night I was looking at the drill holes that you
Yes.
provided, and I noticed that you parse them into 10-foot intervals.
Yeah, the
And
assay was done in Thetford interval back in the 1990s.
right. And so you said that most of the drill holes intercepted the interior pipe at some point or another, right?
Yeah, some it depends on again the angle they were drilling at, where they were drilling from. So some of them would have probably gone into like the upper part of the cigar shape. Um, let's see if I can find that. So I mean, some of the drilling, if you were standing back drilling at angles here, right? Some of it would have gone through the high grade pipe. Some of it would have gone through both.
Right.
So again,
But
we don't have a map that shows where all the drill holes were done
sure,
from. So we're gonna have
sure. But I noticed that when I looked at the intervals, the grades were pretty consistent throughout.
yeah.
And so you said that, I mean, you threw out a number of 0.5% copper for the interior pipe here, in responding to, I think, Doug's question. And so why are you lowballing that? Because the interval suggests that it would probably be higher grade than that. No?
Yeah, I'm just being conservative.
Yeah. Interesting. Um, what now in the pre-feasibility study, I noticed that they said that you got that I guess Plexus discovered 8 additional pipes in the region, right? Were those drilled or just
No, no. So we don't know where the location of all those are. At least I don't at this point in time. Now, Bart Stone, who was a geologist that worked on that, like I'll be talking to him, and we'll be, looking at that from more of a area exploration, what other pipes are there, and then more from a regional area. I mean, some of those pipes may be in the wilderness area, so that would be something where we wouldn't be able to pursue them, but some of them will be outside. So, we're just going to have to get together and get information from some of the guys that worked on the property historically as to where the exploration parts were. But none of the reports that I've got show much. I do have a map that shows where a bunch of the pipes are, so we do have a starting point. But again, I don't have any assay information or anything else on any of the other pipes.
what do you anticipate when do you anticipate that your focus will shift to looking for those additional ones?
I think, we may do some geophysics initially. So again, we'll probably, stick to the area around where the initial pipe is, but, we'll probably start a regional program, after this first drilling program, we'll probably start to look at what the potential is for something bigger.
Okay. And I saw in the risk analysis a little bit of talk about ore dilution. Can you elaborate on that? Is that a big risk or?
I don't think it's a big risk. I mean, it's a reflection of mining method chosen. Like we had sub-level long hole back in the 90s, the mining method. So we had dilution calculations. But again, the dilution isn't at zero grade necessarily, right? It's that whatever the interior pipe might have been. And then, as we're doing development to reach the high grade areas, anything over 0.5% copper was going to the mill. So metallurgical test work was done, just good recoveries, a good concentrate grade. So we'd be looking, at producing a gravity and flotation concentrate and then shipping the concentrate off site to the smelter.
Which smelter would you?
We don't know at this point in time.
Yeah. Okay, thank you.
Thanks, Ed. That's great. Lau.
Thanks for the presentation, Dave. Hi. Just looking at the chart, I see that the shares sort of moved very quickly from roughly the low teens to nearly 32 cents between July and early August last year. I was just wondering, do you know what specifically drove that move at the time, or was it mostly related to the rollback?
I think, we were pretty inactive for a period of time, after the lithium market crashed. So we kind of were in a hibernation mode. And then when we started to acquire the Bornite project, I think we started to see, activity coming back because of that. The share prices been fairly good, as a lithium company, I think our share prices, maybe Sam could answer, but I think we might have gone down to 10 cents at one time, but, typically we're trading above 20 cents. And, we're starting, because we're getting active again, starting to see a lot of interest in what we're doing, especially with this project.
Mm. Okay. So you also outlined several possible monetization paths for Bornite. So you mentioned a JV, a sale, or self-development. And I was just wondering, based on your experience and also what you see today, which of those paths do you think is more likely, most likely, assuming the upcoming work is successful, of course?
It depends on what size we get to, right? Like if we are developing a small project, we kind of have two paths. One would be develop it ourselves, which might, be a way of getting cash flow for the company, and then, being able to, grow as a company out of the cash flow. So that would be sort of a traditional junior mining becoming a producing company approach. But, we may be able to find a smaller or mid-sized operating company that's interested in acquiring a project or acquiring a company to bring it into production. If we're able to find something much bigger, whether that's, being able to convert this interior pipe into resource or reserve, and or if we're finding, expansion at depth or some pipes or a porphyry system, all of a sudden, we might be able to bring a major in as a partner and do kind of a joint venture or some other model like that. Or, if something like that happened, eventually they might want to buy the project or even buy the company. So it really, you don't know what will happen for sure, but certainly the majors are looking for projects right now, right? And especially in the United States. So, it's a good time to be developing a copper property.
Okay, thank you.
Okay, Byron, please go ahead.
Okay, thank you. One of the things I really like about these presentations is that all of my distinguished and esteemed colleagues ask you all these questions, and then I come in and you've already asked and answered several of them. A couple of things going through my head here. When I hear the word Oregon, I don't really hear the word Oregon. I hear People's Republic of Oregon. Although I do kind of get the point. I learned fairly recently that you can actually mine things in Oregon if it's not, trees and owls and stuff like that. I mean, they like mining. They don't like processing is sort of a feeling that I have about Oregon. But you're looking here at a project that apparently it was frozen in amber for the last like 30 years, in between, the prices and what happened in the mid 90s and the EPA and all that kind of stuff. And now it's thawing out. And I totally get, that you're coming at it, as sort of, you're an old hand at it. You did it 30 years ago and you got a lot of work to do to build it up. One thing that I would like to see, I'm not trying to spend your money for you here, but I would like to see somewhere in the slideshow, either you or when your geologist is giving the pitch, I'd like to see the idea of what kind of a system are you looking at here? Because this thing doesn't just happen all by itself in the middle of nowhere.
Yeah.
If you go straight east a couple of 100 miles, you're at the Yellowstone hotspot. And if you do the plate tectonics, this thing passed over, the Yellowstone hotspot, however many million years ago. And a little bit further east, you're in, Integra Resources and that whole Delamar district and all that. So there must be something going on here. But aside from just sort of, there's a breccia pipe, I would like to hear a little bit about there's here's what's going on in this area. Cause that would give me a better sense of, confidence of what's going on. Those are just my comments. They're just what I'm thinking to you and just a better way to present your case going forward. Meanwhile, I totally agree with Doug that, at your current market cap and just, kind of for what this is and where it is and everything, it's a cool speculation. And I certainly wish you well in what you're doing. You have to put a lot of old things together. You have to get some new work. You've got to do a whole lot of modeling to, kind of build things. And, you want to be deliberate and careful. And that seems to be where you're coming from. So that's not really a question. It's just sort of my comments to you. Okay.
I appreciate that.
Thanks.
Yeah, it's certainly like we're an early stage company, yet we have a lot of information on this project that you wouldn't normally have, right? That's the big advantage we have is a whole, a model that was put together, albeit 30 years old, but, it's not like you're starting from grassroots. So, we're excited to try to get in and verify what was there. I can certainly, there are models we can put together. Like I'm not a geologist, so I didn't get into the geology very much, We don't have a geologist on board yet, that we're just in the process of transferring the claims into our name. So we'll get a geologist on board, and we'll be able to incorporate, some of what you're asking for in future presentations.
Yeah. Oh, yeah, that's great. Thank you very much. I wish you well. Yeah.
And I have a couple of geological papers. So if anybody wants those, they were written back in the 90s. So there's a couple of geological papers that were published. So I'm happy to forward those to any
Yeah,
geologist.
you should send them our way. I'll forward it to the guys. They can geek out on geology. So that's good. Okay, Gary, go ahead. Thank you, Byron.
David, thank you so much for the presentation. I've got a couple of questions. In the next round of financing, will management be participating? And then the second question is, there's obviously a lot of unknowns here. Unknowns equal risk. If you were speaking to a large outside investor right now who's seeing this pile of unknowns, this pile of risk, what would you say to them as the number one reason that they should be investing?
Well, if you look at risk, the only risk I see is really related to permitting, right? And you could say that about working in California, working in Oregon, working in Washington, working in British Columbia. There's permitting risk in all of those different locations, and even in Nevada, there's permitting risk. So you will always end up, with some group that probably opposes your project as you go through the permitting process, and we'll likely have that as we go through it. But you have to get in, as the project advances, and do community relations and develop rapport in the local community. When we were at Plexus, we had a geologist that lived in the local community and, went out to different events. So you have to have not just a marketing program that you're doing for investors, but you have to have a community relations program where you develop rapport in the community and try to build up trust in the community for what you're doing as a company. And also, local support, especially because you'll create a number of high-paying jobs that are associated with the project. So, the only risk I really see is more related to permitting here. I don't see the geological risk of being that great because we know so much about the project to begin with.
And how much does that permitting risk change with the Trump administration and their disposition toward all this? Does that factor in substantially or not?
I think it could, right? Like this Fast 41 program that certain companies have started to avail themselves of, it helps speed the process. I think they put a person that's specifically, managing your project, which helps, get it through the different agencies that are involved in the permitting process. So I think it helps keep it on schedule, making sure there's enough manpower as you go through the permitting process. A lot of the delays in permitting are often due to lack of manpower in the different regulatory agencies to actually do the work. They're on vacation, or they don't have enough manpower because they're looking at too many projects, that type of thing. So I think this Fast 41, could really help us move through the project and potentially get funding if we were to develop it ourselves. That's non-dilutive, but they're certainly looking for projects to put money into, but they're looking typically at projects that are at feasibility level when they start to put large amounts of money into, the capital of the project. So we have to be able to get to that stage to avail of significant funds.
Got it.
And
Okay.
David, did you say, I didn't hear about management participating in the next fund?
Sorry. Yeah. I think management will participate, in this and future financing. So, I haven't participated yet in this financing, and I may elect to do that yet, but we've had a lot of interest from other parties. So, I'm limited on what I can do personally. So, just from my financial situation, but I have 500,000 shares plus right now. So,
thank you so much.
Okay, it looks like last question from Ed. Go ahead, Ed.
Yeah, just one more question. You've identified the permitting risk as a known risk. Is there any way to? It seems like you think you can handle that and get around it, but is there any way to deal with that risk before you spend a dime on anything?
Not really. I mean, you end up sort of engaging in these permitting processes, and as you do baseline work and other things, certain things may come out of that technical work. So we know the risk right now is, from the historic work in the free basin rule. So that's the main thing we want to overcome, and that can be done through discharge of water through like a drip irrigation system or sprinkler system on land, as opposed to discharging into the creek or running a pipeline over to the adjacent water basin. So those are things that we can address technically, but there'll be something that probably comes up during the permitting process that you have to address or mitigate, as part of the process. That's why these permitting processes are designed like that, to try to, allow public input and create a better project, by the time you're done. But, we know a lot because, Plexus did all this work, and we have the baseline report. We know the tailings are non-acid generating, for example. They had a management plans for the tailings and the waste rock and other things. So we will do a lot of the similar things that they did historically to manage, any issues that come up. So they provided a pathway for it.
Thank you.
Okay, it looks like Dominic's coming in at the tail end with a question. Go ahead, please, Dominic. And you're muted, by the way.
Just coming in with the last minute question. As far as I can tell, online, your cash position before this raise is 200 grand, something like that.
Yes, yeah, somewhere in that range.
And leaving aside drilling costs, what is your G&A? What's your monthly burn rate? I know you're not fully staffed at the minute.
Yeah, I mean, we're probably our overhead's about $500,000 a year, right? So somewhere in the range. So that's pretty typical of a junior company. For myself, I haven't drawn a salary for well over a year. So I've deferred my salary, and other management has deferred their salaries. Or
are you looking for back pay on the back of this raise?
Oh, no.
Okay.
Management totally is. I've not taken any salary for a period, well over a year. And then we paid our CFO, has been taking a half salary, but we don't have anything extra to pay him. And similarly, our corporate secretary has reduced our rate. So we've had a very minimal burn rate over the last 18 months or so.
Sure. Thank you, David. And just looking at your share structure, that there in this placement, you're offering full warrants at 40 cents, but there are no other warrants outstanding.
Yeah, I think there are some here. If I go back, we have about 1.6 million options, and we have about 3.8 million warrants at 12 cents. So, we're hoping, that some of these warrants will obviously get exercised to bring in more funds, and we'll be trying to.
Okay, so they're a long way in the money at the minute.
Yeah.
Yeah. Okay. All right.
Okay, great. Thanks, Dominic. David, thank you very much for the presentation. I really appreciate it. I guess this is the point where we ask you and your team to leave, and we just discuss this privately for a few minutes.
Okay.
Thank you. Thank you very much.
I'll send you off geological papers then, and anybody that wants to get a hold of me, feel free. I'll be happy to answer any additional questions you have.
Spectacular. Thank you, David. Really appreciate it very much.
Okay.
Thank
Bye-bye.
you.
Thanks, David.
Bye-bye.
I've got a question for everyone, if I may, which is, if there's 3 million tons of copper at 2%, what would the value of that be? I mean, that's the old resource. What would the value of 3 million tons of copper at 2%? I'm sort of at 1 to 200 million, something like that. If it was a bit more proven, is that a fair estimate?
It's about equivalent to 250,000 ounces of gold, I think I calculated.
Okay.
So using copper equivalent, I'm trying to do the math in my head. Their current reserve is about 140 million pounds. And if you take $5 copper on that, that's what, $700 million.
But
that makes sense.
And then
that makes sense. But that would be like,
that's the gross, and
Yeah.
that's a copper equivalent. Okay, so the gross value right now would be, of the current reserve, would be about $700 million.
You want to discount that by about 85, 90% maybe.
Yeah, that was
That's
what I
right.
was saying.
That's typical. Huge discount on the small base
Yeah.
metal operation.
So that's
Yeah.
why. So okay, so
Yeah.
we're looking at $100 million, something like that
50
valuation.
to 100 so far, yeah.
Yeah, it's trading at 6.
So I'm going to weigh in here. Since I was the first to go, I'll be the first to comment. I see two. This is a really nice deposit, but it's small. The risk issues I see are twofold. There's a technical risk, and that's the size of this deposit. I've spent half of my career in the copper business, and you're not going to be able to build a mill with 140 million pounds of copper. It's just not going to work. So that, in my opinion, they need to grow this thing 5 to 10 times to have a viably economic deposit, build a mill, do all the permitting. And that brings up the other issue I have, and that's Brent spoke about it right after me, and that was real concern with environmental permitting, and arguably the most left-wing, greenest environment on the west coast of North America, and that's Northeast Oregon. And I'll leave it at that.
I've seen the videos on Twitter.
On the 5 to 10 times, the interior pipe idea is pretty interesting. If the grades hold up, they might be able to get 5 to 10 times the resource they have already.
Yeah, so we have an indication from him and from some of the drilling that could grade about 0.5%. But I'll tell you right away that mining underground copper, your cutoff grade, whether you can do that at 0.5% copper, is, I would say, somewhat iffy at this point. I just think they need more tons at this grade.
Sure.
You know, I see Doug's point. This is market cap is really low. They've got a $500,000 budget for promotion. So I can see this thing potentially moving a bit, but in my view, it's too small. It's too long to get anything permitted. And you're in, as Mickey pointed out, a place that's going to be hard to get the locals on board. And there'll be a lot of people against it. To me, it's just too small and too hard. I'd rather go with another project somewhere easier.
Muted, Doug.
Yeah, Byron.
There is one other thing about the capital structure, Brent, and I agree with everything everybody said, favorable and unfavorable. It's that if you look at the shares that are outstanding, because this thing has been rolled back before, there are thousands of small accounts in Canada and in the US that, do I recall correctly, about 20 million out of the 30 million fully diluted shares are basically teeny weeny rolled back things that aren't even worth the price of selling. So it's even a lower market cap than it seems like to start with. And if they spend $500,000 on promotion, this could be a very good pass and hopefully a real deal. But I'm just looking at this. I'm looking at it both ways.
Yeah, there's always two ways to look at it: the stock, right? And then there's the stock and the speculation, and whether or not they can actually bring this to mine to production.
They've got several exploration projects, each of which have potential to generate news. And, you know, with some drilling and news, people are going to look at the short-term reaction to the news and lose track of the longer-term potential of the project.
Yeah, I agree with that. And you know, the old saying, my broker's fond of saying it, stay for a good time, but not a long time. And the implications of this raise to me is that management hasn't really learnt their previous mistakes about excess dilution. So, you know, the full warrants, you know, benefits, we'd be buying at the right time in the cycle. They've just had the rollback, they've got no money, we get the full warrants. But then you saw there are loads of warrants at 12 cents, another 3.8 million. So that's presumably those are going to get exercised. So at some stage down the road, this is going to be quite a badly diluted company again. But at this point, it's tightly held because there just aren't that many shares, and also for the reasons Doug said, there aren't that many people who are going to sell because their positions are so small. So
Do we know? Do we know if
Yeah.
there's a hold period on the private placement? Is
I
anybody?
presume 4 months. but I
It's
didn't
got to be
look.
4 months.
Mm.
Like just so you guys know, the warrants outstanding, people will short those. Like as soon as they do the promotion, all 3.8 million of those will be sold and then exercised on sale. So that'll all vanish. And then just another thing, like this is not meant to be crass with these guys, but like this is the classic 1990s Vancouver rental office, 9 companies with 1 PO box situation. So these are like utility hitters, right? So utility hitters are fine because they get the job done, but none of them can really put the ball to the bat, when the cameras are running. And so $1 million of the 3 million will go into the actual project. I'm rounding the numbers, okay? And then they'll get all their back pay and they'll do the promotional, be sort of like, wasted on various things. And so maybe they hit something. It's not like it's a bad situation up there. It's not like it's not real. It's just that, the move would be like, can the market cap triple because it gets like a little bit of attention? But like, I don't think that there's really like real bones and muscle there because nobody's going to step up and like take ownership in this thing. I mean, again, I don't want that to come across the wrong way, but it's like what you're playing for is like a surprise in the drilling, a little bit of a move. They're going to do another financing. There's going to be a bunch of social media ads running. Some people accidentally buy this, but the volume, just so you know, back to October is like $700,000 in the US and like $600,000 in Canada total. So, I mean, it's just like a lot of things have to happen, to be able to move the stock. You're going to be locked up for 4 months. You got a legend. You need a triple. You really need a triple. And maybe it's small enough you can do it, but I think you got to be realistic about the headwinds. All those little holders are going to sell. They're definitely going to sell. They're going to be like, what is this thing? It used to be American Lithium. Next cycle, it'll be an American Biotech or something. I mean, it'll just be, the office there, they'll be able to like reboot it into and it's not like admirable to not take the pay. It accrues as a liability. So it's like, it's a liability. It doesn't really matter if they get the cash or not. It's just sort of like, it's very 90s. It's very old way of doing this.
Yeah, I agree with all the risks, but imagine this, just humor me for a minute. Imagine that they finish the resource estimate in about 6 to 9 months, and it comes out, like he says, say 10 times as large. Maybe you've got 30 million tons of 3% copper or something, and the market goes, okay, well, maybe that's economic. And then they start saying, well, we have these 8 other pipes. The scope of the project starts to look better, right? I'm just being devil's advocate.
Yes, definitely. But those costs are real. They would need to sell it then. These guys are not project builders, I don't think. I mean, it would be like it needs to attract the attention of some big player. Perhaps the narrative gets stronger. And American copper companies are like, we need to have more projects here. We can get this done. I don't know, that all could happen. I think it's possible. It's not the furthest stretch in the world, but I do think it's a stretch. I mean, it's the CSE is a terrible exchange too. I mean, it's like, so you're really biking uphill, with no gears. I mean, you got to really, a lot of good things you need a lot of wind.
As I heard also that as he was answering the questions, he was answering them in a way that was saying, well, this is what needs to be done, and this is what should happen. And if this happens, then that will. But I didn't hear a concrete game plan as to what ownership they were taking and the steps they were going to take. That this is what we are going to do. It was, this is what should be done, and this is what you should do in that situation. And if this, then this will happen or should happen. But I didn't hear a concrete game plan. And so to Evie's point, I'm hearing more risk and more, can this get pulled off than really
But is that risk priced in?
Yeah, I don't know.
Yeah, I mean,
Yeah, I mean,
Well, a
I
red
can't help looking
flag
at
for
those.
me.
Go on, Mickey. Sorry.
I'll be brief here. A red flag for me is he doesn't have any money to put in the private placement. And if you look at the chat at the beginning, I asked, are the insiders participating? And look at the chat and you'll see direct management participation under 100K expected. So they're not putting their own money in this thing, in my opinion.
Yeah, but on the other hand, you're buying a stock that's trading at 38 cents for 20 cents. You got to hope it's still at 38 cents when the stairs come free trading, and but you're getting all those warrants, and you know, if you, it's not the way I like to invest, but it's quite easy to see, you know, do the placement, get your money out, and just hope the warrants work, and if they don't, well, you haven't lost anything.
I think that was Doug's view.
Yeah, it was.
Okay. All right. Well, unless there's a last comment, I'll just thank you guys again for doing this 2 in a week. I really appreciate it. So,
Yeah,
all right.
and congratulations to everybody. These are really excellent questions to pick the story apart. Very valuable.
Yeah,
This
it's not
video
easy.
should be used as an educational tool for the public, I think.
Yeah, I think they're great. I really enjoy them and look forward to them. Thank you.
Yeah. Okay. All right, guys. Well, thank you very much. I appreciate it. You take
Thanks,
care.
y'all.
All right.
See ya.
See you.
Thanks.
Bye bye. Cheers, folks. Thank you.